Good evening everyone, welcome to the official YouTube channel of Officers at 24/7. My name is Amanjyot and today we are going to discuss about what are the international cooperation of money laundering. So as we already know, what is money laundering? Money laundering simply means the conversion of black money into white money, or we can simply say the conversion of dirty money into the clean money. That is known as money laundering, and we have discussed certain things related to money laundering, that what are the stages of money laundering, what is the process of doing money laundering. We have covered everything. So today we are going to cover that which are the following organization, or how many organizations are there in the international level who are focusing on controlling the money laundering and who are focusing on making a certain norms and regulations related to the money laundering. Okay, so today let's start the session. Before starting the session, those candidates who are new to the channel, do subscribe the channel and press the bell icon so that all the upcoming sessions of Officers at 24/7 will be given to you as a notification. Okay, so let's start. First of all, what is money laundering? We have discussed that money laundering is the practice of discussing the origins of illegally obtained money. So when you are trying to convert the illegal source of money into the legal source of money, is known as your money laundering. After that, ultimately, it is the process by which the proceeds of crime are made to appear legitimate. It means illegitimate money which we have earned from a certain criminal activities, we are converting that money in a legitimate source of income. So that is known as money laundering. The money involved can be generated by any number of criminal acts, including drugs dealing, corruption, accounting fraud, and other types of frauds and tax evasion. So all these are the types by which we can create the black money, and we have to convert these black money into white money to show that this is a legal source of income. Now this is known as money laundering. The method by which money may be laundered are varied and can range in sophistication from simple to complex. So as we have already discussed that there are three stages of money laundering, that is placement, layering and integration. So first stage is placement, in which we have to place the money in the financial system, in which we are entering the illegal money, the black money or the dirty money into the financial system. Now this is a more complex or high complex stage. Second is layering, in which we are converting or in which we are creating a complex network of transactions and transfers so that the money cannot be easily identified. And the third stage and final stage is integration, in which we are creating our personal asset to make it show like a legal source of income by generating the income from the layering stage. Okay, so these are the process of money laundering or the stages of money laundering. If we are talking about Bangladesh, in Bangladesh, Prevention of Money Laundering Act 2002, in terms of section 2, the money laundering means properties acquired or earned directly or indirectly through the illegal means. Second is saying illegal transfer, conversion, concealment of location or assessment in the above act of the properties acquired or earned directly, indirectly through legal or illegal means. So under the Prevention of Money Laundering Act 2002, in terms of section 2, the money laundering means in Bangladesh means simply the properties which are acquired or earned directly or indirectly through the illegal means. And the second is illegal transfer, conversion, concealment of location or assistance, the above act of the property which is acquired directly or indirectly through the legal or illegal means. Okay, so this is the money laundering in the Prevention of Money Laundering Act. Now next is who creates policies and control the practical implementation of the process of money laundering. So first of all, we have discussed about the FATF. So FATF stands for Financial Action Task Force. So on the international level, the regulatory authority that issues the cornerstone policies is the Financial Action Task Force. So FATF is the actual organization which on international level controlling the money laundering and creating a certain policies to control money laundering. On a regular basis, FATF issues the directives, circulars and acts that aim to prevent ever evolving fraud and money laundering, as well as keeps track of how effectively they are being followed on the local level. So FATF not only gives us the policies or norms or circulars or acts, but it also keep tracks, it also keep investigating, it also keep monitoring that at the local level these policies are implementing or not. Okay, next is FATF currently comprises 37 member jurisdiction and 2 regional organizations. representing most major financial center in all parts of the globe. So this is the International Corporation of Money Laundering, in which FATF is creating a certain norms, circulars, acts, directives, regulations, policies for all the for the globe to make sure that the money laundering will not happen at the international financial system. Okay. Next, apart from FATF, there are certain other organizations also who try to control the money laundering. So there are also some other organizations that create and enforce anti-money laundering policies. Here are the few major examples. First is International Monetary Fund. International Monetary Fund is an international organization which helps its member countries at the time of economic crisis. So the IMF is an organization that fosters global monetary cooperation, secures financial stability, facilitates international trade, promotes high employment and sustainable economic growth, and reduce poverty around the world. So the all members of IMF, that is 189 member countries, in 189 member countries, IMF helps financially, economically to make the country strong. Okay, so it was created in the year 1945. It is known as the twin sister of World Bank. The member countries are 189 and its headquarters is in Geneva, Switzerland. Its headquarters is in Washington DC. Okay. Now next is its primary function are keeping track of the global economy, lending to countries and giving practical help to members, which also includes anti-money laundering. So IMF helping to reduce the poverty, to make sure the economic stability, financial stability of the country is good, to make sure that the country is sustainably doing the growth of the of itself in terms of the infrastructure, in terms of the human well-being, etc. So apart from this, IMF also keeps track of the global economy, lending to countries and giving practical help to the members, which also includes the anti-money laundering policies. So whenever we are seeing that, whenever IMF sees that there is a certain anti-money laundering activities is going on or terrorism financing is going on, then IMF do not give loan to that particular country, and IMF give certain norms or policies or restrictions on that country so that it stop the money laundering or it stop the terrorism financing. As you all know, let's say for example, let's take an example. As we all know that Pakistan asked for the loan from the IMF at the time of economic crisis, and IMF said to the Pakistan, if you justify your funds, that where you are going to use this fund, if you are able to justify your funds, then we are going to help you and we are going to give you the loan at the time of economic crisis. But the Pakistan was not able to justify its funds. Then the IMF rejected the request of the Pakistan to give funds at the time of economic crisis. And then China helped the Pakistan. Okay, so similarly IMF is also controlling the anti-money laundering activities or terrorism financing at the international level by following certain norms or policies, or by making sure giving a practical help to the members to control the anti-money laundering. Okay, next, apart from IMF, we have a Basel Committee on Banking Supervision, that is BCBS. The Basel Committee on Banking Supervision is a global standard setter for bank regulation. So it set the international banking regulation which is followed by the globe. Okay, all the member countries of Basel Committee follow the international regulations given by the Basel Committee, in which the Basel Committee has given us certain norms so that the risk which can arise at the banking sector will be reduced, and also to control the supervision on all the banking activities, on all the banking matters. So BCBS, Basel Committee on Banking Supervision, sets a global standard for the international banking regulation. It has 45 members and 28 jurisdictions. It means 28 countries are the member of the BCBS. That includes banks and bank supervisors. It has published such documents as sound management of risk related to money laundering and financing of terrorism, and its amendment guidelines on cooperation between prudential and anti-money laundering CFT supervision. So this is also a committee at the international level which is trying to control the money laundering and to control the financing of the terrorism. Okay, by giving a certain sound documents in which they have told us that what management techniques we should use, what risk management techniques we should use to control the risk related to the money laundering and financing of terrorism. So we have discussed that the international cooperation of money laundering is done by the Financial Action Task Force, Apart from FATF, we have IMF, International Monetary Fund, and we have Basel Committee on Banking Supervision. So these are the certain international corporations which was done by these organizations to control the money laundering and to control the terrorism financing at international level. Okay. Now, on local level, the country over the KYC and AML policies lies on the country's national bank and the local financial regulatory authority. Let's say, for example, in India, domestically, we are focusing, or we are totally dependent on Reserve Bank of India and the policy makers, that is Government of India, to control the money laundering and to control the terrorism financing. So RBI give us a certain norms, RBI give us a certain list of the countries, RBI give us a certain list of the persons also, customers also, who was guilty of the money laundering or who was guilty of doing the terrorism financing. So after checking that, the banks provide loan to the customer, otherwise bank will not provide loan. If RBI has said that this person is involved in the money laundering, then that will not happen. After that, we have FIU, Financial Intelligence Unit, which gives us a certain report that is related to suspicious transaction report, cash transaction report, counterfeit currency report. Now these reports are also helping us to control the money laundering or to make to monitor or to investigate the transactions which are or which can convert into a money laundering. So all the countries at the national level are dependent on their central bank and their policy makers. For example, Financial Conduct Authority FCA is in UK, Financial Crimes Enforcement Network FinCEN is in USA, Hong Kong Monetary Authority is in Hong Kong, Monetary Authority of Singapore is in Singapore, Australian Transaction Report and Analysis Center in Australia. Similarly, RBI and Financial Intelligence Unit in India. So all these are the international corporation related to money laundering which are trying to control the money laundering at the national and international level. Okay. So this is the overall introduction of International Corporation of Money Laundering. Now let's start practicing certain questions on this topic. Okay. So the first question is talking about KYC compliance is a mandatory exercise under the prevention of. So what is KYC? Know your customer, or we can say, if we are talking about the know your customer analyst, what is the role of the know your customer analyst is that the KYC analyst's primary work is to review the documentation of a customer. Now KYC is a process of knowing the customer by taking a certain documentation review of the customer. And the KYC analysts do this documentation review for the new customer as well as the existing customer also, to know the level of risk which can be exposed to the bank because of a particular customer. So KYC compliance is mandatory exercise to perform by the financial institution. So it is this exercise is under the prevention of which of the following act? Prevention of Money Laundering Act 2001, Prevention of Money Laundering Act 2004, Prevention of Money Laundering Act 2002, Prevention of Money Laundering Act 2006 or 2007. So which of the following is correct related to KYC compliance? Suraj, we are trying to complete the course by 28th of May because the next exam of KYC AML certification exam is on 28th, and we will cover the course by 26th of May, and 27th of May we will have a marathon in which we are going to practice maximum questions as much as we can, so that in the next day you will be capable of using those concepts of the questions. Okay. So analyst saying B 2004, Prevention of Money Laundering Act came into year 2004. Okay. What about rest? No, right answer is not your 4, it is your 2002. Prevention of Money Laundering Act 2002 has mandatory exercise. In Prevention of Money Laundering Act 2002, KYC compliance is a mandatory exercise. Okay, so right answer will be your C. Second, in what duration of time the KYC formalities must be fulfilled for high risk customers? So as we have discussed that what is the task of the KYC analyst? To do the document verification, to do the review of document of the customer for new as well as the existing customer. So as per existing customer risk, we have 3 types of risk: low, medium and high risk. So how many duration of after how many years we have to update the KYC, periodically update the KYC to know or to fulfill for high risk customers? Is it 1 year, 2 year, 3 year, 4 year or 5 years? For high risk customer, okay? Anil is saying 2 years. Very good. Right is 2 years. That is B option. For high risk customer, it is 2 years. For medium risk customers, it is 8 years. And for low risk customer, it is 10 years. Now do remember this also. This is a periodically updation of KYC duration for the high, medium and low risk customers. 2, 8 and 10 years. Okay. For the high risk customer, after 2 years, you have to update your KYC. And for medium risk customer, you have to update after 8 years. And every 8 years, you have to update the KYC. And for low risk customer, after every 10 years. Okay. Now, which of the following is true about KYC? First is saying the Reserve Bank of India advises bank to make it mandatory for while opening and operating accounts. It is a full form of Know Your Customer. It is a abbreviation of Know Your Customer, not full form. It is an abbreviation of Know Your Customer. So KYC is an abbreviation of your Know Your Customer. Now, low income group customer are exempted from submitting the KYC. So which of the following is true about the KYC? A, B, C, D or E? Let me know what will be the answer of the third question. A, B, C or D? Third is D, that is only B and A. Okay. No. Right answer will be your all of these. All of these are correct because RBI has given the low income group customer, that is no frills account, the customer who used to open a no frills account and who used to open a BSBD account, they can be exempted from submitting the KYC. Their Aadhaar will be linked to their account. Okay, so all of these will be the right answer because the Aadhaar will be linked for the low income group customer in the BSBD account, which was earlier known as the no frills account. Clear? So this is the right answer for the third option, that is E. Now, which of the following steps are involved in money laundering? Which of the following steps are involved in money laundering? Placement, layering, integration, counterfeiting. A, B, C, D or E? Which of the following is true? It can be known as stages of money laundering, process of money laundering, steps of money laundering. So which of the following is true? Fourth. Okay, fourth is D, that is correct. Only 1, 2 and 3, placement, layering and integration. First, second and third, these are the 3 stages and the sequence of stages is same: placement, layering and integration. Now, Enforcement Directorate enforces the Prevention of Money Laundering Act 2002, that is PMLA. The enforcement unit was formed in which of the following years? Is it 1984, 1972, 1956, 1947, 1966? So Enforcement Directorate ED enforces the Prevention of Money Laundering Act, that is in the year 2002. So the enforcement unit was formed in which of the following year? A, B, C, D or E? Which of the following is true? So first of all, Directorate of Enforcement is a specialized financial investigation agency under the Department of Revenue, Ministry of Finance. Okay, so what is Directorate of Enforcement? It is a specialized financial investigation agency under the Ministry of Finance, Department of Revenue. Now, it was enforcement unit was formed in the year 1956. On 1st of May 1956, we have formed the enforcement unit in the Department of Economic Affairs for handling the exchange control laws which are violating the Foreign Exchange Regulation Act 1947. Okay, in the year 1957, this unit was renamed as the Enforcement Directorate. Okay, so it was renamed in the year 1957. That is your Enforcement Directorate. Initially, it was the Directorate of Enforcement in the year 1956 when we have established this. Okay, so ED enforces the Foreign Exchange Management Act also and Prevention of Money Laundering Act also. So it enforces the PMLA Act as well as the FAMA Act. Okay, FAMA is also enforced by the ED. So FAMA and PMLA both are enforced by the ED. It was established in 1956. Its initial name was Directorate of Enforcement. In 1957, it is changed to the Enforcement Directorate. Okay, now next question. Know your customer regulations have been introduced in financial transactions under which of the following regulations? So under which of the following regulations the Know your customer regulation have been introduced? In Banking Companies Act, in Prevention of Money Laundering Act, in Reserve Bank of India Act, in Companies Act, in Banking Regulation Act. So Banking Companies Act was in 19. Prevention of Money Laundering Act is 2002. RB Act in 1934. Companies Act in 2013. And Banking Regulation Act in 1949. Now, which of the following is true? Sixth is E, sixth is B. We are getting two options, E and B. We have just discussed this question in another form. We have just discussed this question. Right answer is Prevention of Money Laundering Act. We have discussed this as a question number first, that KYC compliance is mandatory exercise under which act? Under the Prevention of Money Laundering Act. We have discussed here also in the first question. So the pattern or the format of question is different, but the question is same, that KYC regulations have been introduced in the financial transaction under the Prevention of Money Laundering Act 2002. So right option will be B. Don't confuse with the structure of the question. Do remember the concepts. Conceptual understanding is very important. Next. In August 2020, which of the following has received clearance from the UIDAI to carry out eKYC authentication using Aadhaar? That is related to the current news. So is it IRCTC, is it Info Edge, is it CDSL, is it NSDL, is it none of the above? Now those candidates who are live in the session, do like the session also. So what is the right answer? 7th is D, NSDL. Okay. What about rest? Right answer is not NSDL, it is CDSL, which was promoted by BSE, Bombay Stock Exchange. So CDSL is a Central Depository Services Limited. It has received the clearance from UIDAI to carry out the eKYC authentication using the Aadhaar. Okay, so the clearance has been obtained to act as a local authentication user agency or eKYC user agency. Clear? So right answer is your CDSL. And in May both have given the permission to eKYC Aadhaar authentication. Okay, next. Know your customer anti-money laundering CFT guidelines to prevent bank from being used intentionally or unintentionally by criminal elements for money laundering or terrorism financing activities. Now, what does C stands in CFT? What does C stands in CFT? So question is asking that know your customer anti-money laundering and CFT guidelines to prevent bank from being used intentionally or unintentionally by criminal elements for money laundering or terrorism financing activities. Now what does C stands in CFT? Is it countering? Is it case? Is it current? Is it combating? Is it none of the above? Eighth is D. Correct. Combating is true. Combating is correct. Right answer is D. So combating the financing of terrorism is stand for CFT. Okay, combating the financing of terrorism is CFT. Now, anti-money laundering and CFT is the regimes which are maintained by Financial Action Task Force to combating the money laundering activities for terrorist activities in over the world. Okay, so CFT is your combating the financing of terrorism. AML is anti-money laundering, and the KYC is know your customer. So right answer will be D. Okay, now so let me know out of 8 questions how much questions you have given the right answer. Out of 8 questions, how many questions answer you have given correct? Now those candidates who are preparing for JAIIB also, and they are going to give their exam in the June month. So there is a selection batch we are starting from 20th of May, and this batch is actually the crash course in which we are going to cover the syllabus, which is very important in previous year questions as per the last year's papers pattern. We are going to cover those topics and those modules which are very important and which are going to give the highest marks in the exam. So this is a crash course starting from May 20th, and to enroll in this particular batch you have to go to the Adda 24/7 application, and you have to go to the JAIIB CAIIB section. You can use a Y496 code and you will get 78% discount while purchasing from Adda 24/7 application. Okay, apart from that, there is a video course also available for bilingual and English medium, and to enroll in these video courses you have to use the same code Y496. You will get 78% discount. After that, if we are talking about the test packs, because practice is also important while understanding the concepts, so CAIIB and JAIIB test packs are also available. To enroll in these test packs you have to use the code Y496S, and you will get 18% discount on this particular products. Okay, so these are the upcoming products on Adda 24/7 application. Now those candidates who are new to the channel, do subscribe the channel and press the bell icon so that all the upcoming sessions notification will be given to you. Okay, 7 out of 8, 4 out of 8. Okay, that's good. 7 is a good score. So do try to understand the concepts first. Okay, whenever we are practicing questions, the conceptual understanding is very important, because questions are asked very logically. You have to use your practical knowledge also in the questions. Okay, so do make sure you are completing each topic as a conceptual understanding, then you are practicing about the topic. Okay, so thank you all for joining the session and stay safe.